Now, I just want to bring your attention to the US dollar versus the Russian ruble. We can see here that the US dollar has fallen to the 50% Fibonacci retracement level from the low of 2011, taken to the high of 2016, and we're just at that 50% Fibonacci level, and we've seen that since the last time we saw price at this level earlier in 2017. That price has just merely oscillated in this kind of like triangular kind of shaped box, and this is exactly what happened earlier in 2016, where we saw price get to this level here, and it merely fumbled around and range bound in this kind of rectangular box as well. So based on past characteristics, we could reasonably expect it to continue to do the same until it breaks either to the upside or to the downside. Either way, my guess is as good as yours. However, based on the evidence we have in support of this, we can say that it looks likely to potentially go long, based on the fact that this is seemingly a well-tested level of support as seen previously earlier in 2017. It's a Fibonacci level, a major Fibonacci level as well, or should I say psychological line in the sand. But what is interesting about this one as well is the fact that last week's close as a bullish pin bar reversal basically coincided with a Fibonacci extension. So if you take a note here of this ABCD pattern, this thunderbolt formation, ABCD patterns on point D typically mark a point of reversal, and it's no real coincidence that we've got the extension. If we pull the Fibonacci from B to A, we can see that the bullish pin bar reversal has coincided with rejecting the 1.272. Not only that, but also the 200 exponential moving average as well. If we take points A to B, draw them here, we can see if we've got symmetry between both as well. Typically, in my view, the better ABCD patterns, there usually is symmetry, even though we don't necessarily get that all the time. Okay, we do have it just about if we don't include the tail of this bearish pin bar reversal, but the fact is we do have the tail as basically marking out the fact that it has rejected voraciously the 1.272 level, or Fibonacci extension, should I say. So we've got a good overlap here. We've got the horizontal level, we've got the Fibonacci extension, as well as the 50% Fibonacci retracement as well. Do we have any other clues? Let's have a look. Do we have bullish reversal divergence? No, we don't, unfortunately. All looks very neutral there. Let's see if we've got a reversal on the smaller time frame as well. No, we don't. But what is interesting with this one is the fact that if we do get triggered into this trade, i.e. we're looking to trade this on the weekly, and we've got a buy order at the break of last week's high, i.e. at this point here, with our stop loss below the low, we will not be triggered into the trade unless we have a major shift in the cyclicity on the smaller time frame. So while we don't have that higher low or inverse head and shoulders on the 4 hourly, which we typically look out for when we are trading the weekly time frame, that what is interesting is the fact that, okay, if we place our order to say go long here and go back down to the 4 hourly time frame, we can see that on the 4 hourly time frame that we've been making very solid lower highs and lower lows. There we go, respecting more often than not the 50 EMA. So if our entry to go long on the high of last week, or the break of last week's high on the weekly time frame, is here, if you recall back to the weekly chart, then we'll only be triggered into the trade if there is a major shift in this counter trend, this downward trend on the 4 hourly here. So we would only be triggered in if we get a major break to the upside. That's all very well and good. We might even get the higher low, or indeed the right hand shoulder, if this does amount to be head and shoulders formation on the 4 hourly time frame. You might get it during the week. Remember that our entry is still a decent long way away from where the market currently is, because it might be a bullish pin bar reversal, but it's a seller bullish pin bar reversal. So the market is currently here, our entry is all the way up here, and we could find that we have the continuation of the formation of a bullish pattern throughout the week, and we might get triggered into this later on in the week. So we're still just going to place our orders above the high, stop loss below the low. The great thing about this one as well is the high of this, the weekly high has not been breached for 1, 2, 3, 4, 5, 6, 7 weeks. So if we do get triggered into the trade, this will be quite a significant event. Okay, so that is the US dollar versus the Russian ruble.